Well, welcome to Florida, Monday, December 5th, 2022. I am Kenny Polcari, your host of the party, and it is another spectacular day here in Jupiter, Florida. Look at that sky behind me, nice and blue. It's gorgeous out. It's about 75 degrees, probably going up to about 80 today, so it's the perfect day. So what is it that you need to know? What happened on Friday? What happened to the NFP report? What happened to OPEC on Sunday? What's that going to say about the market going forward? And what should we be concerned about? Well, by now you heard that OPEC Plus held the current production levels steady, right? So that includes, though, the 2 million barrel production per day that they announced a month ago. They're holding that lower production going into the new year. The NFP report on Friday suggested that inflation is becoming a bit more entrenched, and that's a problem. Investors now wonder what the new terminal rate will be, or the neutral rate. Remember, we think it's 5.25, but could it be something different? And China decides to relax COVID regulations after a lot of companies are looking elsewhere. And Foxconn is to resume 100% production before year end. Isn't that amazing? We'll get into that in a moment. And it is Christmas season, right? It is December, so I'm going to give you the 7 fishes that we do on Christmas Eve. And tonight is the first one, linguine and clams. We'll get to that in a moment. So the non-farm payroll report hit the tape at 8:30 in the morning on Friday, and it was stronger than many had expected, myself included. I thought it was going to be weaker, but in fact it was stronger. And that is not good for the outlook going forward, right? Along with the strong labor market is also the fact that wages continue to push higher, and so that keeps the Fed on track for that, at least that 0.5 point rate increase next week. But it also confirms what they've been warning about all along. Inflation is becoming entrenched, and that's going to make their job much more difficult. The report revealed that employers added 265,000 new jobs in November versus the expectation of 200,000. The unemployment rate held steady at 3.7%, and wages continued to accelerate higher. Wages grew by 0.6% month over month and 5.1% year over year. That's versus the expectation of up 0.4 and up 4.7, and it's higher than the October report of plus 0.4% and 4.9%. So that is not something that the Fed wanted to see. Initially, the report sent U.S. futures plummeting, with the Dow, S&P, NASDAQ, Russell, Transworld's down sharply in the pre-market, and then down sharply when the opening bell rang at the New York Stock Exchange. The negative reaction suggesting that good news is bad news for the markets, and that the terminal rate might be higher than the current expectation that we talked about. Now look, the Fed is already expected to continue to raise rates through March of 2023, taking the terminal rate, otherwise known as the neutral rate, to the 5.25% range after the March meeting. So the initial dramatic reaction suggested that the Fed will have to get even more aggressive in 2023 and push a terminal rate maybe beyond 5.25%. And that would continue to cause investors to have to reprice risk. But by the end of the day, the tone had calmed down, leaving the indexes just mixed. The Dow up 35 points, the S&P down 5, right? The NASDAQ down 21, not bad. The Russell gained 11, while the transports gave back 20 points. So nothing really dramatic after what we saw around the opening. And that concern helped bond yields surge in the morning before retracing a bit, right? This morning yields are up slightly. The 2-year yielding 4.3%, the 5-year 3.7%, the 10-year yielding 3.51%. What's becoming another popular theme for investors that are concerned about more volatility in the months ahead is the 1-month T-bill. It's currently yielding 3.6%, while a 12-month CD at your local bank could yield you 4.5%, right? And it's a big week for oil. Or could it be day one for the European energy crisis that is now upon them and us? Yesterday's OPEC Plus meeting, and the Saudis agreed to stay the path and continue with their announced 2 million barrels per day rate of production cuts through 2023. They didn't announce any new additional cuts, which helped oil rebound from the lows of 70, from the lows of 70 to the lows of 80 last week, right? Today brings the European Union's ban on Russian oil, along with the G7 decision that puts a $60 price cap on any seaborne Russian oil, leaving Vlad to threaten to cut supply to any country adhering to the price cap. Now, look, the EU will need to replace Russian oil with oil from the U.S., maybe from Norway, maybe from the Middle East. In addition, you have Joey, who's announced that the U.S. is going to need to buy oil to refill the Strategic Petroleum Reserve, and he's put a good till cancel order out there to buy oil at $72 a barrel. So it appears as if there's plenty of demand, and that's going to keep the price of oil higher. Now, coincidentally, China chooses to announce what they're beginning to relax their extremely restrictive COVID-19 regulations that have caused so much disruption to the supply chain and the oil demand story. Apparently, someone, think Gigi, is smartening up after the recent nationwide protests across the country that brought so much unrest, as well as the realization that big tech, now think Apple, along with a host of others, think Amazon, Google, Samsung, Volvo, just to name a few, are moving away from complete and total dependence on China's manufacturing chain. And all I can say is about time. Timmy Cook, Apple's CEO, telling us that he's moving some production out of China into India and Vietnam. And at the same time, Foxconn, right, which is Apple's biggest supplier, tells us that their Chinese plant in Chengdu is about to resume full production of Apple products by late December, early January. It's amazing, isn't it? And that translates into more energy demand. And all of those issues are causing oil to rally today, right? Early this morning, oil was up about almost 2%, trading at $81.50 a barrel. Now, oil remains below all three trend lines, but appears ready to challenge a short-term trend line at $83.65. So depending on how the Russian oil story and the China COVID story unfolds is going to determine what the next move for oil is going to be. Gold, which had rocketed higher last week, is now trading down $1.50 at $1,808 an ounce. Recall that we did kiss resistance at $1,824 last week, and we backed off, which I think is just a temporary move for gold, right? Because it remains in that broader trading range of $1,740, $1,824, within that range, right? With many traders expecting gold to find plenty of support at the 1,800 level. The dollar index has broken down significantly over the past month and has dropped by more than 7%, breaking all three trendline supports. But look, we're trading at 104.70 on the dollar index, and that should find some near-term support right in here at this level and provide some calm for the dollar index. This morning, U.S. futures were lower. Dow down 130, the S&P down 20, the Nasdaq down 35, the Russell down 7. Economic data today includes the S&P Global Services PMI index, and that number is expected to be 46.1, well into contractionary territory. ISM Services PMI is expected to be 53.3. So those two data points are in conflict with each other since they both measure the same thing. Which one will investors pay attention to? In addition, look for factory orders up 0.7% and durable goods expected to be up 1 full percent. Stocks in Asia rallied hard after the COVID announcement. Japan up just a little bit more than 0.1%. Hong Kong up 4.5%. China up 2%. Australia up 0.3%. And Taiwan was up 0.1%. Stocks in Europe are mixed as the official start of the Russian oil drama begins. The UK up 0.3, the CAC 40 up 0.3, the DAX down 0.5%, Euro stocks down 2%, with Spain and Italy up 0.1%. There's no economic data to speak of across the Eurozone, so investors there are trying to assimilate all the recent moves and news and announcements out of China, out of Russia, out of oil, out of gold. The S&P closed at 4,071 as stocks churned, right? 4,045 is now considered support, at least short term, and it appears that we're going to test that this morning, right? It's going to be important to see if it holds. Otherwise, we could be on the path to test even lower, down at the intermediate term trend line at 39.25, something I think is going to happen before we make it to the end of the year, and have that Santa rally that's going to bring us probably back to the 4,000, 4,100 range. Investors are now putting JJ's speech on the back burner, and they're concentrating on what lies ahead in 2023. Now, to be clear, rates are going to continue to rise, right? We know that. And inflation is not responding by March, then expect to see rates to continue to rise in April, May, and possibly June, right? right? You know how I feel about it. Stick to the plan. Stick to the stuff that people need. Energy, consumer staples, utilities, healthcare are all at the top of your list. Okay, so it's now December, and as many of you know, for me, it's all about what we cook on Christmas Eve, right? You've seen in an Italian household, Italian tradition is to serve 7 fishes on Christmas Eve, and you can ask why, or you can just accept the fact that we do it. Over the next couple of weeks, I'm going to give you the 7 dishes that we make with a couple of alternatives in case you want to just mix it up, right? Because there are some ones that you never change, and there are ones that you can flip in and out. So today I'm giving you linguine, the clam sauce, right? It is the one staple, one of the staples, and you can find me cooking it on my YouTube channel. So if you go to Kenny Polcari Media on YouTube and search Kenny Polcari Linguine and Clams, you're going to see me cooking this actual video, right? I tell you the whole story, and if you go and watch it, I hope you enjoy it. But let's tell you how to make it. For this, you're going to need the clams, right? So you need 2 pounds of 2 dozen, not pounds, 2 dozen clams, plus a container of chopped clams. They'll give it to you at the fish store, right? You need olive oil, you need garlic, onions, you need salt and pepper, you need a bottle of clam juice, and you need white wine, you need a pound of linguine, and you need fresh grated cheese. The cheese is the best part. Now, you want to bring a pot of salted water to a rolling boil on the back burner. Just get it ready for when you need it. And if you're making this sauce the day before, then that's fine. Then don't put the water on until you're going to use it. Now, you want to start with the clams, right? You want to take a couple dozen or so. You want to put them in the, they're all in the shell. You want to wash them thoroughly. Make sure you remove any sand from the shell, right? Then you want to drain it, and you want to leave it there. Now, in a big pot, you want to heat up some olive oil. Next, you want to add the sliced and crushed garlic. Saute that for a couple of minutes, and then you're going to add the sliced onions, right? And you're going to saute them until they're translucent. I like a lot of onions. That's just me because they're sweet. You do as you wish. Next, now you're going to add the clams, shells and all, right into the pot. You're going to season it with salt and pepper, a splash of white wine, and a bottle of that clam juice, and then you're going to cover it, right? Bring it up to a boil and then cover it. Reduce heat to medium. Continue to move the clams around and stir them around until they open up, right? And if you need a little bit more juice, feel free to add another bottle of the clam juice, right? When the clams have opened, remove some of the clams from the shell, right? Returning the clam itself to the sauce, but discarding the shell while keeping some of the other shells because that's all important in the presentation. It really looks beautiful, right? Now you're going to when you're ready, now you're going to put the linguine in the pot. You're going to bring it to a boil, and you're going to cook it for 8 to 10 minutes. You want to make sure you leave it al dente, so less is better. You want to strain, always reserving a mug full of water, right? Return the pasta to the pot. Add back about 1/4 of the mug of water just to re-moisten the pasta. Give it a chance to suck it up. Don't leave it wet on the bottom. Then you're going to add the linguine. You're going to add the clam sauce with the clams and the juice and everything right to the linguine. You're going to mix it up well, and then you're going to serve that immediately in warm bowls, having plenty of either Romano or Parmigiano cheese on the table for the guests. Although there are some Italians that would argue that you never put cheese on fish. To that, I'd say you're out of your mind, because when you do, it is so delicious. Now, you can enjoy this dish with toasted garlic bread, right? Just slice Italian bread the way that I always give it to you, in a glass of white wine. Nothing fruity. You know me. I always like the Pinot Grigio Santa Margherita, and that's the one that I use actually in the dish, right? Because it complements the sweet taste of the clams. This dish should take you no longer than 40 to 45 minutes to make start to finish. So if you want to make it on Christmas Eve, just allocate enough time. I make it fresh on Christmas Eve. I'll make it earlier in the day and then take it off the heat and then just heat it back up, boil the pasta, and then serve it along with the other 6 dishes which you're going to get over the course of the next week. Look, it's an absolutely gorgeous day. I'm out here in my short sleeve shirt. I'm going to get ready. Maybe I'm going to go to the beach today. I don't know. After I do some work, I got to answer some emails and get some work done. So maybe the beach is not for today. But in any event, it's gorgeous here. I hope you have a good day. Until tomorrow, take good care.